Welcome back to the Block Fuel podcast, Market Insights with Ryan Rasmussen. I'm Sean Ristau. I have my colleagues Jody, Flournoy, and Avi Mash with us today. We're going to dive in with Ryan here from Bitwise. Thanks for taking the time, Ryan, to join us. Definitely a exciting week here in the markets. Why don't I take people know who I am, so I'm going to step back. Why don't you take a second to introduce yourself? Tell us a little about what you're working on and what Bitwise is.
Yeah, excited to be here, talk to you guys. It's been an exciting week. I think there's a lot to unpack here. But as you mentioned, my name is Ryan Rasmussen. I'm the head of research at Bitwise. We're a crypto asset manager, probably most known at this point for launching one of the spot Bitcoin ETFs back in January. Also have been around just since 2017 in the crypto space, have the largest crypto index fund in the US, and have been serving institutional investors like hedge funds, RIAs, financial advisors, wirehouses, broker-dealers since 2017, expanding to retail a bit now with these ETFs. But really what we do is help educate traditional investors and help funnel traditional investors' capital into the crypto ecosystem through products that they're used to, whether those are private funds, public funds, ETFs, and things like that.
No, fantastic. Jody, you want to kick us off? What do you got?
Yeah. It's a big week, Ryan. We appreciate you joining us. I know you guys have a lot of research on your end to do, but I think at like a high level, like a lot of listeners are just trying to make sense of the week, and no one has all the answers of what's going on, but would love to hear your quick take on, if you're in the office and someone pulls you over and say, hey, Ryan, like, what are you thinking about this week? Like, is it the Japanese yen carry trade? Is it, potentially like rate cuts are coming, but they might take a little longer and it's not going to be a soft landing. It's going to be like a hard landing where something in the economy breaks and then we cut rates. Like what are some of the things that, and it can be a layman's version of that, like sticking out to you is a way to explain volatility.
Yeah, there's a lot going on. I think what we're seeing right now is really for the first time this year from a crypto or Bitcoin market perspective, and then in the macros, that macro's taking the front seat. And I think macro will remain in the front seat for the next few months at a minimum. I mean, you spoke about some of those macro concerns and headwinds, or I guess shaky waters that we're riding on, whether that's the yen carry trade seemingly blowing up or needing to be unwound, whether it's the potential of a not so soft landing because of the shaky economic data that we got last week. And so I think there's, those concerns. There's also concerns around what's going to happen within the US from the election standpoint. What happens if Harris wins, which the odds are now putting kind of that race at a more even odds rather than what it's been for the past 3 to 6 months. And then what does that mean if there's a Democratic sweep across Congress? And then zooming out, there's obviously rising geopolitical tensions, conflict in the Middle East, which people are concerned about. So I think there's just this, what I would call a recipe for disaster from all different fronts, and people are scared. They're kind of wondering when the next shoe's going to drop. And I think that explains a lot of the volatility that we saw last week and coming into this week. But as much as that volatility has been to the downside, there's also, been a bounce back that's been rather sharp and rather quick. So I think people just don't know what to do and are being very reactionary rather than, kind of having a general thesis on going forward on what they think markets will do in 2 to 5 years. They're really worried about the short term.
Yeah, so Bitcoin's up pretty big today, obviously, and so we caught you on a good day. But in terms of going back to like the election, I don't know if you're able to share in your position, but like, what is the dichotomy if Trump wins versus Kamala in terms of price of Bitcoin is the thing people care about, right?
Yeah, no, it's a really interesting question. I've been thinking about this a lot lately, particularly as I mentioned, right? I think the odds of a Trump win were at an all-time high a month or so ago. And then we've seen that kind of come down closer to 50-50. I'm just talking about prediction markets like Polymarket, but I think even in the polls, we're seeing the convergence here of the odds. And for a while, my thought was if Biden, this is before Harris stepped in, but if Biden wins, that's bad for Bitcoin. And if Trump wins, that's good for Bitcoin. Now, I don't necessarily believe that the Harris administration would pivot their approach to Bitcoin and crypto like they've kind of telegraphed that they would or signaled that they would. But rather, I think the fact that one candidate in Trump is pro-Bitcoin and spoke at Bitcoin 2024, the largest Bitcoin conference in the world, and laid out a multi-point plan for how his administration would embrace crypto, whether that's Bitcoin miners or the regulatory front or creating a strategic Bitcoin reserve. Those are all bullish tailwinds for Bitcoin. On the other side of things, I think that Bitcoin would actually see some bullish tailwinds if Harris won, but it's not for the reason that I think people would expect. It's not because I think that Senator Warren and Harris and that administration would all of a sudden embrace crypto. It's actually because I think people would be concerned that we'd see this continuation of the economic policies of the Biden admin. And where do you go when you're worried about what's going to happen with the US dollar? What's going to happen with inflation and printing money and this runaway US debt situation? You go to the only escape valve that you really have, which in these times in such a liquid asset like Bitcoin is Bitcoin. So I think it's bullish either way in a kind of a weird, not doomsday scenario, but if Trump wins, then we have bullish tailwinds from adoption of crypto across the industry more broadly and positive regulatory swings. If Harris wins, we have adoption of crypto by those staunch believers that continued Biden economic policy is going to be net bad for the dollar. And where do you turn? You turn to Bitcoin as an escape valve from that.
I like that. I like that take a lot. I remember in 2016 when Barack Obama was elected president. I was like in high school, deep South Georgia, and everyone. Not 2016. This is like 2008. So and gun sales skyrocketed. And so I think at first, if you were 6 months out, some people would be like, "Oh no, like I'm not going to open a gun store. It's a terrible time to do it because they're going to like have really harsh gun laws." But then the opposite actually happened of like nothing really came about on the legislative side, but a ton of people were buying guns because of the fear of legislation that came about. And it sounds like you're making a similar point there.
Yeah, I think that's exactly right, Jody. That's a great analogy.
No, I mean, actually, it's interesting because I remember, whenever there is some type of, shooting or mass event in the country, there seems to be an uptick in like gun sales and things of that nature. So, I want to ask a question related to what you were talking about. So this comes up all the time when I'm talking with friends. So last Sunday, great example. The only thing open was Bitcoin. All the other markets in the morning were closed. Saturday, we saw a sell-off. Sunday, we saw a sell-off. If people think that this is where you go to have a safe haven, isn't that the opposite of what happened, if you will, with Bitcoin? You had, or was it more just because everybody was saying, screw this, I'm out, I'm going all in on treasuries, type thing?
Yeah, I think when you have these mass shock events where all of a sudden these risks come to the surface that people maybe knew about or probably didn't know about, what do? You go to sell whatever liquid assets that you can. Real estate, not very liquid. Equities, not liquid on the weekends. And so you really are left with an asset like Bitcoin, which trades 24/7, 365, which is a huge benefit to have global liquidity to the tunes of tens of billions of dollars a day that anyone around the world can access, again, 24/7, 365. But that also brings in that ability to, when you can't sell any other asset, I guess you can sell Bitcoin. And so I think it's both a blessing and a curse. I think as the market continues to grow and as the Bitcoin market cap gets larger and liquidity continues to increase, those shocks of people kind of reshuffling their assets won't impact the price as much. But I think it's another reason why, despite those sharp sell-offs that we saw over the weekend, we've seen really sharp bounce backs as well, because people can move in and out of this asset at a much faster pace, and they can do it 24/7, 365 in a way that they can't do with other alternative assets. It's not easy to do that with gold or private credit or real estate, but it's really easy to do that with Bitcoin. Yeah,
and I look at that and I say, I look at it from the purview. So, having spent quite a bit of time in the wealth management space, when I look at it from, you just had this week, you had Morgan Stanley say, now your RIAs can get into Bitcoin ETFs. Perfect week for this to happen on. I mean, it couldn't have happened on a better time. But that, I'm curious if you've heard any, pushback further to everything based on the events of this week.
I think it's the opposite, to be honest. I mean, yes, we're starting to see this unlock of the second wave of adoption where wirehouses like the Morgan Stanleys now can start to access Bitcoin. A lot of people who aren't familiar with the wealth management world would have assumed that as soon as the ETFs went live, or probably even before the ETFs were live, that most of these institutions could access Bitcoin one way or another. we've all been doing it for years on Coinbase or through decentralized exchanges or some other format. And so it is kind of strange to put on the hat if you're not in the wealth management industry, you're not in the traditional finance industry. It's like, why didn't they just buy it on Coinbase? Why didn't they just buy it on Binance or another exchange? But I think the fact that now we have the switch flipped for RAs wirehouses like Morgan Stanley, we can see them start to come into the market. I think what this type of situation does is create a beautiful entry point for those types of investors. And I was on the road, just to tell a story real quick. I was on the road last week, met with 15 different RIAs and financial advisors across the Pacific Northwest, Oregon, Washington, Idaho. And the conversation there was largely surrounding, I wish I would have got in at a better price. And I believe in Bitcoin for the long term for my investors. So I think, you have these large shocks to the system where the price can fall 10, 20%.
Yeah.
I think a lot of investors are looking at that as a great buying opportunity and long-term entry point rather than, oh no, what's Bitcoin going to do from here? They've seen it fall to 15K and recover multiple times. And so I think it's, in large part looking like a beautiful entry point. And a lot of these advisors and wealth managers, they run model portfolios. And when something falls and they rebalance their portfolio, they're going to add more. Now it's same impact to the upside. But I think particularly with this environment we're in, I think that more of those professional investors are looking at this as a beautiful entry point when we get down around 50K rather than, run for the exits.
Yeah, I just got to ask one last thing, and then I'll
3 in a row.
I'm hogging here. But no, I got to ask. So the demographic of those advisors were what age demographic are we talking?
That's a great question. Say 50 and older is likely 50 and older is the demographic of that. Those wealth managers, most of their clients are probably 40 and older, right? So in some ways, they're older than I think some people would expect, because when you think of the Bitcoin investor, you think of the millennial for the most part. You think of, that 20 to 40-year-old, but really most of these wealth managers and most of their clients are, 40 to 60 or 70 years old. And now that means they're not putting 10% or 20% of their portfolio into Bitcoin. Of course, these wealth managers are talking about 2% or 3%, or the most aggressive one was up to 10%, right? So it does kind of range
to one that had 10%. That I'm trying to remember who it was, but we've talked to one guy and he had 10%. So you get a little wild, you go a little crazy, but that'll just be the new norm here in a couple of years.
I think that's right. Yeah.
Can you talk to a little bit about the ETF process? I don't know how involved you were, how much you can share, but I think there's 11, 12 that were initially accepted. Why wasn't there 20? And kind of what was that process like? And then I guess a follow-up question to that, kind of going back to what Sean was saying, how are you guys preparing yourselves when the 40 and 60-year-olds, like 20 years down the road, some of the newer folks can, are buying Bitcoin on Coinbase? I'm sure that's a question you guys think about, often. How do you get other younger folks, more involved in thinking about, why I should go through an ETF?
Those are two great questions. On the ETF front, this was really a historic moment for not just Bitcoin, but for ETFs as a whole. ETFs have been around for about 30 years. They've really grown into this, nearly $10 trillion industry where most traditional investors access markets, whether those are equities markets or commodities markets like gold, for example. ETFs are one of the primary access points for gold for most traditional investors. So ETFs are a really big deal. We really haven't had a situation which we had in January where you have, double-digit issuers lined up launching the same product on the same day. Usually you have one issuer issuing a product, that product finds product market fit, then you have other issuers following, seeing that there's traction and seeing they can raise assets that way. So I think the fact that we had 11 of these issuers line up on day one was really kind of historic. That's why you kind of need to look at the success of the group of those ETFs as a whole to think about what that's doing for the Bitcoin market rather than looking at any one ETF in particular, albeit some of these ETFs have already raised billions or 15 billion worth of assets, which is, again, really impressive when you think about ETFs. Most ETFs don't raise over 100 or 200 million in their first year. Bitcoin ETFs have raised nearly 20 billion in their first 6 months. So I think it's just a unique situation. And the fact that we had everyone from, a crypto specialist asset manager like Bitwise, who only operates in the crypto space, it's all we do 24/7, 365. Then you have BlackRock and Fidelity, some of the largest asset managers in the world that have ETFs and private funds and all kinds of investment products spanning every industry you can imagine. When you have both of those participants entering the market at the same time and seeing that there's going to be client demand for these assets. I think that's the broader signal of we're headed in the right direction. We're headed towards mass adoption for Bitcoin. And the fact that we have all of these different parties trying to get in on the action, to me, signals that, we're at the right place at the right time, and we have a really exciting future ahead for Bitcoin and for adoption. So I think that's it on the ETF front. What was your second question? Lost myself.
I did too. I'm trying to remember.
I'll jump in. Yeah. So, what's your thought on the ETH ETF? Like just ETH in general, communicating that to RIAs, wealth managers, like, as someone that's like held ETH, and I think probably all of us have, for a while now, it's, there is competition. There's EVMs or SVMs, different like virtual machines where you can build smart contracts, on Solana and Avalanche and a lot of these other platforms. And so there's less of a moat of being like the king, which is BTC, and having the store value use case. Is how do you communicate like nuances like that to people either internally or externally that could be investors?
Yeah, it was really interesting. I'll go back to this last week when I was at all these meetings, and really this was the first time. I've been at Bitwise for 3 years. I've been on the road with our sales team talking to traditional investors and these wealth managers, every month for over that time. And this past week was the first time that most of those conversations, when Ethereum was brought up, it was the advisor or the client bringing it up. Often what we've done in the past is that they're interested in Bitcoin. They kind of want to learn about crypto more broadly. So we talk about Bitcoin, we talk about Ethereum, maybe we talk about Solana or DeFi if they want to go down that rabbit hole. But this was the first time where we had clients. So tell us about Ethereum. How do you think about Ethereum, and how do you think about it in the context of Bitcoin and in the broader crypto sector? And I think one thing that I found that was really, really fascinating, and it's something that we expected with the launch of the Ethereum ETFs, is that it's almost easier for a lot of these wealth managers to understand Ethereum from an investment standpoint than understand Bitcoin. And the reason that is that, one, not every traditional investor, and honestly, a lot of wealth managers don't invest in gold. So the digital gold narrative to them, they're like, great, I get it. I see how it's digital gold. We don't invest in gold, so we're not going to invest in Bitcoin. What they do invest in, what every investor on the planet invests in, is tech and tech platforms and tech stocks, hence the Magnificent Seven. And so what we're seeing when we're talking to these wealth managers is they're like, well, how do you value these assets? Like, okay, well, it's a tech platform. We've seen increased adoption. We're seeing applications built on top of them. We're seeing users. We're seeing developers come into the space. And with that, they pay fees. Those fees translate to revenue. That translates to cash flow via staking yield or buy and burn mechanisms. And so you can start to see for them that it looks like a cash flow producing technology investment. And that's something they can really get behind. And I really saw the light bulb go off so many times this past week. It was pretty amazing to me. When you start to talk about those things, they're like, oh, okay, so is that addressable market bigger than Bitcoin? I mean, everyone uses technology platforms, and if it's the app store for crypto, then wow, that's really amazing. So I think the adoption of Ethereum ETFs will be slower, but will still be really exciting. And it's partly an educational process, that investors have to go through to, get on board with Bitcoin, then learn that there's more to the crypto industry than just Bitcoin, then start to learn what those assets are.
Yeah, I mean, I think you're like 99% of your job. I mean, I find that in my role, and what I do at Fusion IQ is it's, selling into advisors. I'm constantly, you're educating them on whether it be the software, whether it be, the underlying use cases, things like that. But, touching on that point. So something that I've realized or seen this week is volume on BTC on the overall spot exchange. It's been pretty high. I mean, you're talking, I think we're going on almost 5 days now of 600 million plus on, one of the largest exchanges out there. I'm not going to name it, I'm just kidding. No, Coinbase. We're seeing 600 million 24-hour volume. I mean, the last time we saw that consistent volume, I mean, today we're over 1 billion again in the last 24 hours. That's pretty incredible. And, to that point, wanted to see what your thoughts are, why we're seeing that. Do you think this is going to continue? Is this the start of a bull cycle? What do we, what are we thinking here?
Yeah, I mean, when you have these volume spikes, it tends to be followed by, sharp price changes, which is no surprise. I do think we're in this kind of wait and see period. I really think that most investors right now are afraid that a second shoe is going to drop. And so when you have these big swings that are happening, I think that's more the traders that are going in and taking leverage long or leverage short positions and then getting wiped out because there's so much volume and so much volatility. That can be great if you know how to manage positions, but if you get over your skis, and what we've typically seen in bull markets in the past is this kind of whipsaw like action when it comes to volatility, volume, and liquidations, where investors, when the price starts to run, they start to go net long because they think we're going to have this big giant rip up, and then those positions get liquidated, and then you have on the other side, right, price falling, people start to take on short positions, those get liquidated. I think it's kind of crazy to short crypto markets with how much volume and volatility there is, but many investors out there do it. Hedge funds really love these ETFs. I think one of the primary buyers and sellers of these ETFs that you're seeing flow through in those volume numbers are hedge funds getting in on the action and loving this kind of volatility that we're seeing.
Well, that's how they make money. I mean, that's the name of the game for them. And Avi, over to you.
Yeah, I was just gonna say, I know this answer since we spoke to your colleague a few weeks ago, but
who's his colleague?
Say that again.
Who's his colleague? Who? I'm just kidding, Matt.
Matt,
good old Matt Hogan.
Matt Hogan.
Go Matt.
Matt's on vacation, just so everybody knows. That's why and
he is.
We might have to have Ryan and Matt on next time because I don't know. You guys are a powerful team.
Would love that.
Moving on. Real quick though. So like for ETFs, right? All of them are buying just Bitcoin. There's not other stocks or equities in there. Why are the prices different? Across the board, shouldn't they all go up if Bitcoin's price go up or price goes down? I know the answer now, but for the other listeners that are tuning in, I think it's an interesting question for those that are not really in the space.
It is an interesting question. I've learned so much more about ETFs over the past 12 to 18 months than I ever thought I would need to. I think this is a question that we actually get a lot from those traditional investors that we're speaking to, because they want to know, look, if all of these ETFs are the same in concept, if all they do is take in dollars, buy Bitcoin, put it in cold storage, and then vice versa when people want to redeem, then what's the difference between them and why are they priced differently? And there's a few different variables that go into play. So first and foremost, you're going to have the management fee, right? So those are going to be anywhere from 20 bips up to 250 bips, or 0.2% up to 2.5%. That's going to impact fund performance or fund return, and ultimately the price of the underlying ETF. Then you're going to have how much liquidity the ETF has. That's going to impact the spread, right? So you can think about when you're bidding an ETF, the bid-ask spread can swing larger if it's a less liquid ETF. And so if that spread's a penny, then you're going to get a better price for the ETF, and you're likely going to have more people coming in to use that ETF versus another because they want tighter spreads, especially professional traders. And so I think that affects the fund performance and the movement of the fund up or down. And then you have this impact of premiums and discounts. Now, premiums and discounts exist with ETFs because you're always trying to track the net asset value of the underlying asset. In this case, the underlying asset is Bitcoin. And so you always want the market price of the fund to closely track the price of the underlying assets. And when there's a lot of demand, you can think about a lot of people coming in trying to buy that ETF. It might trade at a premium. The premium is very small. You're talking cents here, 1, 2, 5, 10, 20 cents. But at the same time, when a lot of people are selling, that turns into a discount, which means that people are willing to sell the ETF at 10% below the net asset value because they're just trying to exit their position. Those three things, the management fee, the bid-ask spread, and then the premium or discount, affect the price of the asset, and they impact the return of the overall ETF relative to the return of just the price of Bitcoin.
Avi, I feel like I was just at finance class. I mean, that was pretty solid. That was good. Jody, what you got? I know you got one.
I think following up on that, I think good comparison to the market, and you don't have to go too deep into this product if you don't want, but is with the Grayscale. So we past couple of years we had Grayscale Investment Trust with GPTC and their ETH BTC, or their ETH product, and they had these crazy, fluctuations from net asset value to where it'd be like at one point it was like 50%. So like, let's say you're buying, 5 Ethereum worth of the trust, but you're buying it at a price that was like 50% off. And I think it was because people were worried about a lawsuit or, hey, is there going to be regulation coming? Which is great if you get that discount, you want to take that risk. But it sounds like a good takeaway now and just the maturity of the market is that, hey, there are differences in net asset value, but it's fractional. It's very, very small compared to like early, digital asset products.
Yes. Yeah, I think that's exactly right. If we would have had ETFs 5 or 6 years ago, then I think that giant 50-60% discount that existed for many of these OTC or over-the-counter traded trusts wouldn't have existed. But because we had to use that OTC QX trust model, which is far less efficient than ETFs, you had these giant discounts and premiums. When they launched, these were trading at huge premiums. And I think even some of the grayscale trusts today, whether it's like Solana or other trusts, trade at some crazy premiums. It's partly because they're less liquid, right? They're not as liquid as these ETFs. And partly it's because of the actual vehicle itself. And this is why ETFs have become so popular with traditional investors and are largely the way that most investors access sectors or commodities, is because you get these really tight premium and discounts to the NAV. And so it means that you can really just buy the underlying asset without going through all the headache of acquiring gold or oil or, building a basket of stocks yourself. And you're going to very closely track the value of that basket of assets.
I did think of my question I forgot earlier. So it was around like the population that is buying ETFs in general, not just with Bitwise. But how are you guys, and maybe you guys come up with new products and things like that, but for the crypto native folks, is that just never your audience, right? Like the folks that are younger, typically may buy from like a Coinbase or another exchange directly. Like, what are your thoughts on the aging population for the business overall, and then like ultimately, what are the advantages, I guess, of an ETF in general, compared to buying?
Yeah, that's a really good question. It popped back into my mind as well a few minutes ago, so we're on the same wavelength there. I think it's really interesting. We're huge fans of self-custody here at Bitwise. For myself, I self-custody, majority of my assets in crypto. And so we think people should keep doing that. But ultimately, I believe that investors, regardless of age range, but even younger investors and crypto enthusiasts, will access Bitcoin or Ethereum, whatever the crypto asset is, in multiple ways. Yes, I hold some crypto in cold storage, but I also trade it on Coinbase because it's just easier. And if I'm not near one of my hardware wallets, I'm like, what am I going to do? It's easier to move capital there quickly with stable coins. And then, if I have the desire to gain exposure to Bitcoin in a 401k or a Roth or my retirement account, the way to do that, largely speaking, with whatever platform, Bitwise or other employers use is through the ETF. So I think what we'll see, and then I guess in addition to that, it's not just 401ks, but then traditional investors, wealth managers, advisors, right? They use these centralized platforms. They're not going to go buy all of their clients' portfolio through Schwab and then add some Bitcoin through Coinbase, or through cold storage. It's too much of a headache for them to do that. They then have to worry about, how do I bundle the reporting for this portfolio to my client, and how do I explain to them what the return risk of the portfolio, taxes get complicated that way. They take on some security risk if they're not going through a custodian like Schwab where they do everything else, and they're going on a centralized exchange, or they're like custodying themselves. They take on some security risk that they don't want to take on. And so for that reason, I think that investors, regardless of age, will continue to access crypto through all of those different venues. Some of the younger crypto enthusiasts or crypto evangelists will likely want to buy Ethereum and stake it themselves directly. Some of them might use a staking service provider. They might use a Lido, which is a decentralized provider. They might use a Coinbase, a centralized provider, or they might buy a staking ETP eventually when those exist, or they'll just maybe stake directly by running their own node, right? So you have this, I think, wide variety of interests, and sometimes it's easier to access it this way, sometimes it's easier to access it that way. But I believe that as crypto continues to grow, we will see investors of all ages and types access crypto through all of these venues, and there won't be kind of this concentration by age bracket to where the younger investors are only using Coinbase or self-custody, and the older investors are using ETFs, I think that investors of all age types will use, all of those mediums and vehicles.
No, that's great. Something that came to mind, we kind of touched on it a little earlier, but earlier this week when all the volume was going on, I mean, before we came on actually the live stream here, we were talking about, I hadn't seen this kind of volume probably since 2008. It was literally reminding me of like watching when Bear Stearns was, in a world like trading at 600. Next thing you know, you look over, it's like 100. I'm like, that ain't good. But yeah. But that being said, the question, this time around, Coinbase and the other crypto platforms, they held up, no problems. The traditional though, it wasn't so good. And I was curious if you heard any, did you guys hear anything on that? Did you, have any customers, complaining on that stuff, or what did you hear on that?
Yeah, our investor relations team did see kind of a pickup in calls from advisors, right? I think for the most part, most of these traditional investors understood that it was the platform, not the fund manager, fund issuer, that was the problem. Particularly interesting, I think, when this Microsoft and CrowdStrike outage happened, which now feels like a lifetime ago, but I think was only like 10 days ago, or something like that. Last week when I was meeting with these investors, they all were talking about how that gave them issue with accessing their accounts, clients accessing their accounts, them being able to place trades. And they spoke about how, isn't this what crypto is supposed to fix? Isn't this like one of the benefits of crypto? And I think these events each time, even though you can get lost in the Bitcoin price falling 10, 20% or some nuance there, I think each of these events just continue to highlight and just nudge forward the use case and the reasoning why the underlying technology, the blockchain technology, the 24/7, 365 global decentralized markets that are based in smart contracts and based in blockchain technology are just a superior way to operate and can offer many efficiencies over the traditional system. And so if you stop thinking about the price of Bitcoin, you stop thinking about the price of Ethereum and what's going to happen with ETFs, and you get back to basics of this is at its core a technology that's going to fundamentally change the way that we operate and that we interact with each other in the financial sector. These type of events, whether it's the fact that CrowdStrike and Microsoft took down trading platforms, or that you couldn't trade on Sunday, or even on Monday when markets opened, you couldn't trade because the platforms were down. The fact that DeFi, that Coinbase, that these decentralized exchanges were all operating as if nothing had happened is really, really phenomenal, and is another boost for why crypto in the long term is a technology that's going to change the way the financial system operates.
Yeah, I think you make a really good point on, for someone with the ETF product on, the value of DeFi. I think we saw yesterday, it was or 2 days ago, was it Boats, which is like Blue Ocean ATS that Robinhood uses for 24/7 crypto trading or 24/7 trading. And they did, they made the call, hey, at 5 p.m. we're shutting down and we're not going to power this overnight. Versus DeFi, which is, I think you have the other, risk, which is MEV, which is where people can see where you put an order on chain and then they can front run it, and if they just up their gas fee and pay a priority to get in the fast lane. I guess for you guys, and it could just be from a personal standpoint, how do you think about DeFi, or how do you talk about DeFi, within Bitwise?
Yeah, I'm a big fan of DeFi. I've spent a lot of time understanding DeFi lending markets, decentralized exchanges, decentralized staking services. I think it's really great technology. It's one of those things where I think until you start to use it, it kind of sounds like funny money, like up in the sky type thing that you that seems crazy. And you think about, or people talk about algorithmic stablecoins and all this crazy stuff. But when you go and use DeFi and do something as simple as, lend USDC out or USDT out, in a DeFi market, particularly in these weekends with high volatility, these times high volatility, it's a beautiful thing. It's just operating as designed. The algorithms are processing liquidations and deposits and borrows without anyone being involved. And if you have, manage your position correctly, you're just enjoying the fact that the yields jumped from 6 or 7% to 18 to 20%. So I think DeFi is really, really beautiful. I would love to see more DeFi based products. I think we're starting to see, companies like Maple Finance and Ondo and embrace DeFi in interesting ways, and it's going to take many years before we get there. But I think DeFi is like one of those categories of crypto that's proved itself time and time again, whether it's the CeFi lending crisis of 2022 when BlockFi and those other companies were blowing up, and Aave and Compound were just processing loans and redemptions, loans and borrows, seamlessly. And then fast forward to moments like this past weekend where decentralized exchanges and DeFi protocols were still just operating as normal. Like they don't really care what's going on in the outside world. They're just there to do one thing and do one thing well. And that's just, run the code that they were created based on.
Well, it's kind of like power. I don't know. It's like almost like, what's that one movie, War Games, like back in the with like the computers and back in the day, probably way before your time, but it came out I think in the 80s. But I think Matthew,
I don't know that one.
Yeah, take a look at that one. But the question I had, so somebody came up or brought up to me yesterday the death cross that is pending on Bitcoin. If you're familiar with what's going, where the moving averages are converging. And so curious on your thoughts on that. Haven't seen too much talk about it, but some people are really following it.
Yeah, I will say Bitwise, we're not much of a technical trading shop. We do have some more active strategies that a counterpart of mine runs, and that pays more attention to kind of, where moving averages sit. Because most of our products are just net long in nature. They're just these ETFs or index funds that just buy and hold. For the most part, I don't pay attention too much to that short-term price action, but I've seen some chatter about it. I think, if you look at moving averages in the past, they have been a good signal of where we're headed. And there's just so many external factors right now. And going back to what I said at the beginning, where I think macro is just like taking the front seat, and Bitcoin is just going to follow for the foreseeable future.
Oh, for sure.
You guys look at like the whales out there, because back in the day, it was like 80% of Bitcoin was owned by like, I think a couple thousand people or something crazy, right? So I know that's coming down, and I'm sure the ETFs, are pulling in more of that money now. But is that something you guys are looking at and like monitoring specific wallets and seeing their activity at all?
Yeah, I mean, I think we follow kind of the what's going on in Twitter, and it's kind of impossible to see when you start to see movements, whether it's the US or Germany or big whales have moved money from here to there. But we don't follow. I don't personally follow it all that closely, other than what happens on Twitter. I think what I do get asked about a lot in these meetings with wealth managers is what's going to happen with Satoshi's Bitcoin? Like, that's like a question that I get asked like so much more than I would have ever thought that I would be asked. And like, what if he just sells it one day? And that's like one of those risks that people coming into the space and just learning about Bitcoin, from a traditional investor standpoint, are really worried about, and it stops them from investing sometimes, because they think like someday those Bitcoin will just wake up and they'll start to move. So some people certainly are watching. I don't pay that close attention to it.
Yeah, that's like this week there was I saw some random message pop up on one of these Telegram news things, and somebody said it said a news thing like Solana or CIA is behind Solana. I'm like, what in the hell?
Yeah. Right.
And then somebody comments, they're like, well, that explains why,
that's my tweet, probably.
What's up?
I was kidding. I was saying that was probably my tweet.
Sounds like an Avi tweet. Yeah.
No, it's just, it was just interesting. There's, that's the other thing is going on, some of these social media platforms. If you're an RIA, it's probably the worst thing you can do, because it could send you down a real rabbit hole real quick.
If you Google Satoshi Nakamoto, Elon Musk's face pops up. I just saw for the first time.
Really?
He's been working on his SEO.
I'm sure he did that.
So Ryan, got a curveball for you, but it's a fun one. So this week, one of the news that was like popping up on Twitter, I haven't spent time verifying it. I'm not going to, is Tim Walz, which is Kamala Harris's running mate that was chosen this week for vice president. The news was that he doesn't own any investment assets. So he doesn't own stocks. He doesn't own bonds. He doesn't own, I think even his house property. He sold that when he moved into the governor's mansion. And people are losing their minds. They're like, hey, we love this because it's transparent. It's the opposite of like the, Pelosi tracker on Twitter that's saying like,
Right.
hey, she's buying NVIDIA calls. She's buying, right before the CHIPS Act. And, on the other hand, they're like, I don't really trust this guy. Like, who doesn't even, doesn't seem like he's being savvy. And as a head of research at Bitwise, like, what's your thoughts on that?
Yeah, that's an interesting question. I saw kind of that news flow as you saw there. So I think, I think it goes to show that us in the crypto space are hyper aware and hyper sensitive to investing, the financial economy, making sure you put your capital at work, the fear of your savings getting debased or runaway inflation kind of, making your savings worthless. But I think the average everyday American, which he somewhat seems like he fits that mold pretty strongly, having been a teacher and well, now VP, not really that average, but VP candidate. But I think it just goes to show that the average everyday American is still not thinking about investing. They're not thinking about Bitcoin. I have many friends that despite me talking about Bitcoin and crypto whenever we're together and them asking me about it, they don't own any investments. They don't have a stock account. They don't own real estate. They certainly don't own crypto. And so I think it just goes to show that, most of the Americans, everyday people, just are behind the curve when it comes to, making sure your capital works for you. And what does that mean broadly for Bitcoin? When I think about that, I just think that we're still so early. I think that the fact that you have someone that's at this point in their career that, is probably like my parents' age or so, who's only invested in like the pension fund that the teacher's pension fund, I think, is like what I saw that like their life savings is like a really interesting nuance when you think about our age or a younger demographic, I should say, of investor who is, very aware of the global financial crisis and lived through that, and then lived through COVID, and now is living through what's going on right now, and also having this opportunity to invest in not just Bitcoin, but through Robinhood and equities and such. I just think that it's kind of a change of demographic from the the country, good old America is going to keep growing to like, you need to make investments to preserve your wealth.
I mean, it's also like, I think we have to think back, like my parents are in their early 70s. I mean, investing was not as easy back when they were growing up. Like it wasn't, you just got on a computer and like, click, now I own this, or click, now I sold that, whereas today, I think it's kind of becoming more ingrained, but it is rather scary, the amount of people that I talk to as well. And you ask them like, oh, what are you invest in anything? No, and they just rent and they don't have any investments. And I'm like, so how do you make money on your money? Like, you kind of need I don't know. It goes back to another topic, which is like, I think the financial education needs to improve. And I think you see that through dealing with, RIAs and their clients, that what they're hearing, things like that.
Yeah, I think that's right. Well, funny anecdote there, which this element of it is, I guess, not funny, but my grandma passed away a year and a half ago or so. And I was just I'm up with my family here, and my aunt was selling her estate, and I saw my aunt on Sunday, and she handed me this envelope of like U.S. bonds that my grandma bought when I was born, and I had never held a physical bond in my hand before, and I was kind of fascinated by this. Like Albert Einstein is on is a picture on one of these bonds. Like kind of, I don't know. That was a funny anecdote that like blew my mind. But in general, I was like, wow, I've bought bonds before, whether it's in my 401k or like messing around trading. But the fact that this would have been 30 something years ago, you had to go out and physically purchase savings bonds. Yeah, exactly.
Yeah.
I'm telling this story about how she worked at Boeing, and they would have these bond auctions where like they would buy these savings bonds. And then you fast forward to today, and you can trade Bitcoin at 3 a.m. If you can't sleep, or you can, trade GameStop like through Cash App or Robinhood instantly. Like we've come such a long way. And it's really fascinating to think about, what you said about how prior generations just didn't think about investing, and it was so hard to access investing. And now I think today more and more people are learning about it, which is good.
So somewhat breaking news. It looks like about 2 hours ago. I don't know if you saw this yet, but Putin just signed a bill that would legalize Bitcoin mining in Russia, which is interesting.
I did not see that.
Think about
That's why all that Bitcoin was going over there now.
Well, I wonder if this becomes like almost a war on Bitcoin, right? Which government can capture the most Bitcoin. So I don't know if you saw that, a lot with China, the U.S., like where all that money goes, but another powerful country is in play.
Yeah, I had seen that news. That is interesting breaking news. I think, when we've seen these kind of Bitcoin mining government like news items drop in the past, like when China banned Bitcoin mining, I think it's like air in a balloon, right? Like you squeeze it one place, it pops up somewhere else, and that goes to speak to how decentralized this network is. And I think mining Bitcoin in Russia is an interesting prospect. I mean, I'm sure they have a lot of natural
not your coin.
Yeah. Yeah. I don't know how many people will see, how many of these like publicly traded miners will see take advantage of that.
Hey, Ryan, go back to your earlier point. I was just gonna say, Sean was talking about financial education, and that's like a lot of what we're seeing is, and like what we focus this channel on, the brand on, is just like educating people, pulling from these different groups. I think one thing, just to your point on investable assets, and what I think is the ETFs make interesting is, hey, how do we educate people that you need to own assets? Hopefully, you've learned from all the Bitcoin maxis that are like, do a good job of this, because they talk about it all day, is the money supply. It's a massive money supply. Like people talk about stimulus checks, but more actually money supply growth came from like PPP loans. And it becomes a very intertwined, like both political parties involved with this. And really what I'm getting at is people see liquidity coming. A lot of people that are following macro are saying like, hey, we're probably going to cut rates. There's going to be more liquidity coming. The people that did really well, and the reason that the wealth gap could be growing, is because people that own assets are going to see growth in those assets. People that don't own assets aren't. So with the ETFs, are you guys thinking is like, what's like the primary focus of education? Is the second question is pricing them where, an ETF is let's say price of Bitcoin's 59,000, pricing it at $59. Does that make it more approachable for people that are new to investing to say, hey, I can own 59 shares of this ETF versus not being able to buy Bitcoin? No, I don't want Bitcoin. So is that like part of that, like easing people in to investing in a new asset class?
Yeah, that's a really interesting point. I mean, I do see the case for just having this like relative price of it. It's like 1/100th or whatever that ratio is of the actual price of the asset. Now that's coming from someone who, I pay attention to the price of Bitcoin every day. I know what it is. It's like, sadly, or for better or worse, one of the first things I look at when I wake up, and one of the last things I look at before I go to bed. Hope my girlfriend doesn't see this. And I don't think the average investor though has any idea what the price of Bitcoin is. Many times, again, in these meetings or when I'm talking to friends or whoever it may be about crypto, they'll ask like, what's the price? And like they have, like, oh, I don't know, it's at 65,000. Like, oh my God, really? And like they haven't checked into the price of Bitcoin since it was in the 40s or the 30s. And so all that to say,
yeah.
What?
I didn't mean to interrupt you. That happened with me and a friend, literally, and I always bring that up. He thought it was at zero, and it was at like nearing 70,000. I was like, you have a lot of money, so go for it.
Yeah, like all that to say, people aren't really paying attention to it. I think day to day, like all of us on this stream, obviously are, and so I don't think that it's necessary to kind of price these ETFs relative with some like tight ratio to what the underlying assets priced at. I think where it does come into play is the cost of these ETFs. We spoke earlier about this premium and discount and the bid-ask spread, and if you have a low-cost ETF, that 1 cent or 5 cent spread or premium or discount impacts the total cost of ownership more than if you have a higher price ETF. When you think about like how many basis points is it costing me to enter and exit this trade, if I'm paying 5 basis points from a premium, discount, and spread perspective, that's going to cost me more when the ETF is at $3 a share rather than $35 a share, $350 a share. So I think it impacts pricing, but most investors, and I think rightfully so, because it's really small potatoes, don't think about that stuff.
Well, cool. So I don't know if Sean, Jody, if you guys have any more questions. This was phenomenal, and I know we did this on a whim here. So Ryan, very good.
You nailed it.
Breaking news we didn't expect you to have a full answer on quite yet to digest it all. But thanks again.
Well, we got to ask him one question, one curveball, Avi. You know, what's so rumor has it the Don is saying he's got a big crypto announcement coming up. Any ideas? What are you thinking?
The Don Junior, I saw that. Yeah. You know, it's a good question. I think that you know, for better or worse, both the candidates for presidency have discovered that crypto voter is real. The crypto voter matters, and likely in many instances is a single issue voter. And so, you know, if you can market your campaign or your candidacy in an interesting way to that crypto voter, it may buy some votes. I'm not quite sure what that would be. I hope it's not another meme coin saga like we saw a month or two ago.
Or NFT.
Yeah, you know, I saw that. You know, yeah, the NFT would be interesting. I would like it to be rather something like something with like Bitcoin mining. I'm not sure exactly what that would be, but that could possibly be one interesting element. Maybe they'll implement like crypto tips in Truth Social. I don't really know. Will be interesting to see.
That's hilarious.
I think what we saw, like the feedback from like, you know, the crypto community post BTC Nashville was, you know, they liked RFK's speech because there was some like concrete things. So I'm wondering if he's going to take that feedback and say, hey, like I need to go up there and announce like a strategic Bitcoin reserve. RFK did 4 million, you know, committed, which is a huge percentage of the overall market cap of Bitcoin or supply of Bitcoin. So maybe he comes up with 5 million. I don't know. Maybe it's something about capital gains taxes of, you know, doing 1031 exchanges if you're changing between Bitcoin to Ethereum or similar like that. That's
maybe putting some of his political funds into Bitcoin. Never know.
Yeah.
That would be really interesting. That would be a bit of put your money where your mouth is. I think there's a lot of skepticism across the crypto industry, and rightfully so. I think I saw, Balaji, you know, tweet about this today because there's this Crypto for Harris announcement or article. I don't know if you guys saw that went out, right? Where there's this Crypto for Harris initiative now they're launching. It's like, it's kind of like that scam of send me 1 Bitcoin, I'll send you back 2 crypto policies. I thought that was a really elegant way to put it, right? And so if they buy Bitcoin with some of the campaign funds, I don't know if legally you can even do that, but like that would be a bit of a signal to like, look, we're not just pandering for the vote. We actually believe in this for the long term. I think that would be a really strong signal rather than
that'd be good,
as bullish as it is the speech at the events.
Yeah, interesting. Well, thanks everyone for coming on. Ryan, truly a pleasure. We'll have to have you back almost like quarterly or something. You're filled with some good knowledge here to share with everyone. So really appreciate you popping on, and we'll be back next Thursday. We got some good podcasts coming up. So if you don't follow us on Twitter, check us out at BlockFuel. So
we also got a special one coming Monday. Actually, it's noon Central Monday. Yeah, with Nick from Solana's coming on.
Nice.
Yeah.
Nice.
Ryan, thanks again for joining. It was awesome.
Thanks, Ryan.
Guys, thank you. It's been amazing. Thank you so much.
Enjoy your time up there in the Northwest states.
Thank you. Thank you.
Take care, buddy.
Bye.